Hello friends, this is Bela Vora with your next market update. This is Q2 2021. I always get asked, how's the market? And here's my attempt at explaining some of it. Feel free to subscribe to my channel for more such quarterly updates and other things real estate. Um, so without further ado, let's start with the macro trends. I always start with the macro trends and national numbers first. Um, this is what we're seeing. And I want to thank Jayneel, my client, one of my clients who has written this blog for he works for a finance company, and his blog was very helpful in summarizing what I wanted to say. The link to the article is below. Please feel free to, check it out yourself. But where the buzz we are hearing about is the inflationary tendencies. Look at this graph and look at the inflation rates that have happened since March. Um, this is, gas prices have increased. The home prices, of course, have increased. People are talking about travel getting more and more expensive. Eating out is expensive. Hotel rooms, you absolutely can't find them anywhere. Everybody's on vacation and or wants to be. And lumber prices have increased. So there are certain categories of industries where we're seeing inflationary tendencies. And the buzz in the market is that what's the Fed going to do about it? And of course, the finance guys will tell you what the Fed's going to do about it. But the buzz in the real estate world and the mortgage world is that the interest rates can't stay as low as they have been. They're likely to rise, maybe sometime the end of the year. How much, nobody knows. But that's the buzz for the real estate industry. So inflation is the talk of the day this quarter. And what's happening at the macro levels? Let's look at the Chester, Montgomery, and Delaware County numbers. As predicted, as expected, everything is high. The number of homes being sold, crazy high. Days on market, crazy low. Homes are selling very fast. The prices have increased, of course, 8.6%, 9%. Depends on where you live and what kind of neighborhoods. Um, Nationally, I believe the number is 8.6%. Prices per square foot, of course, high, and the homes are clearly selling above list price. So if 100 was your list price, they're selling at 102, 103, 104, 107. It all depends. So the home prices are actually higher than the list price. So that's the stats for the last quarter. The numbers are in. A couple of things to keep in mind anytime you're comparing the numbers. If they were comparing the numbers to last year, remember we had the pandemic shutdown, so the numbers would be skewed. March, April, May, we were shut down, and especially in Pennsylvania, and we were totally going crazy, not knowing what this COVID business was all about. So those numbers will be a little skewed. But even if you're comparing, like these numbers compare 2021, June 2021 to the average monthly numbers from March to June, and it's still accelerating. These numbers are still higher and higher and higher. So all those things we're talking about, multiple bids and crazy offers and in waiving of contingencies, all of that was true in the last quarter. Sellers were laughing all the way to the bank, buyers little frustrated, putting bids after bids after bids and still not getting their homes. Um, how long is this going to continue? Is the question in everybody's mind. Again, they surveyed a lot of important people, economists and real estate gurus. This is the price expectations survey, and it shows what's going to happen with the acceleration in prices. And yes, 8.6 is consistent with what I just showed you with Chester, Montgomery, and Delaware counties, but they're talking about decrease in inflation. So the prices are still increasing. So this is the reduction in acceleration that they're predicting over the next 5 years. Um, so again, the question in everybody's mind is this a bubble? Is it going to burst? Likely not, because we're still seeing acceleration in prices, right? So let's talk about a couple of other trends that have been happening. One is the sale of vacation homes. People have ended up buying their dream homes at the beach, on the at the shore, or in the mountains, or by the lake, or by the ski slopes. This was the time for emotional purchases. They didn't want to upsize or downsize. They're perfectly happy living in the home where they're living. However, they want to take advantage of these crazy good interest rates and lock them in for the next 30 years. And so they have made those vacation home purchases, and you can see in the graph that those have ticked up considerably. So these are all the numbers that have already been recorded. Every time we talk about market updates, it's always in hindsight. We're talking about the last quarter. So in July, I'm talking about March, April, May, June. And I wanted to take a few minutes right now to talk about what we are hearing in terms of the buzz on the street right now. So, what I'm talking about now is not reflected in the numbers, but we're sensing it because we're doing this all day long. And I'm talking to other agents, and we in mastermind groups, and listening to what the gurus are saying, and we're seeing a bit of a slowdown in the acceleration, if you will. So if we were going at 200 miles per hour, it is now at 170 miles per hour. And this will explain why. So this was the headlines in the MLS email that I got recently. Bright MLS is the MLS that realtors use. And for the second straight month, they're seeing a bit of a drop in the increases. When they see these many homes listed and these many went under contract, the pendings were always keeping pace with the new listings. But in this situation, the pendants are sort of lagging behind a little bit relative to new listings. What does that mean? All the sellers are waking up to the fact that these are crazy good times to sell their homes, and we have more sellers on the market. And the buyers may be just a tad bit fatigued from this whole craziness. So instead of getting 15 and 20 offers on a property, maybe you're getting 4 or 5 good ones. Or instead of getting an offer right on day 2 and 3 and some aggressive offers that say, take the property off the market, I'm paying this, we're probably waiting till the weekend or maybe a few more days. Or homes that are not quite as updated and fancy, and like an updated, well-maintained home in a good location will always sell at a premium. And the ones that don't quite match that criteria are probably seeing a little bit of a maybe we don't want to pay such crazy prices for a home that's going to need a lot more work once we move in. So that is anecdotally happening in the markets right now, and that's a first sign of a shift in the trend. So I'm talking about a shift. Is this a bubble bursting? That's another story. I still believe it's not a bubble bursting. Again, going back to the stats, here are the numbers for how much equity. Remember when we talked about in our previous updates, people have a lot more equity in their homes. They're never going to just leave the keys behind and walk away from their homes, because the homes are going to fetch more than what they owe the lender. So selling makes more sense for them. And we talked about the economy recovering, except for specific industries that have been impacted by pandemic, which are actually coming back full swing. Most of the other industries are doing fine. The stock market is doing phenomenally well. There is no reason for it. Everybody compares it to the subprime mess of 12 years ago, and that was caused by loose lending standards. And our lending standards remain tight as ever. People who are getting these loans are, like last time, people who didn't deserve them got loans, and now that's not the story anymore. So this is again a survey that I saw recently, interesting numbers, where homeowners equity keeps increasing over the next few years, and this is the expectations in their wealth increasing thanks to homeownership, which is a phenomenal benefit of homeownership. If you're throwing away money on rent, you're not building anything. So once again, no bubbles bursting yet. We don't know what the future has. Higher interest rates, slowing down of pace. Another trend right now, of course, it is July and August. The seasonality sets in. Now we're talking about realtors being at the beach, and homeowner and people, buyers and sellers. They didn't go on vacations last year because of COVID. They're out on vacations big time this summer. So August tends to be a very slow month in real estate traditionally, and the real estate market in the last few months has been defying all the seasonality and the traditional expectations. But maybe this July and August, a little bit of a lull, is because of the traditional seasonality of the market, when August is typically a slow month, when people who need the school districts have already made their decisions, and the others, maybe we'll see a little bit of an uptick with the fall market, which we usually do in normal markets. So what does this all mean for buyers and sellers? If you're a seller and you sold your home, you laughed all the way to the bank, as they say, or you were really happy when you saw that wire hit your bank account. Nobody's walking to the banks anymore. More power to you. How exciting. If you're a seller on the fence and you're still thinking about selling the home, reach out to your realtors, see what the market is doing in your communities. see what kind of upgrades you need, if any, if you need to make, and how much will they cost, and what will your home fetch as a result. See if that softening is affecting you, and make the decision accordingly. I still believe the interest rates are low. It's not too late. It's a great time to still sell. Um, for the buyers, if you're a fatigued buyer, don't give up yet. Don't give up just yet. Maybe now you can squeeze in that inspection contingency, which you haven't been allowed to do until recently. Or maybe you can, the appraisals are not a concern anymore, not as much of a concern, because now we have settled, comparable homes that are at higher values, and so the appraisals are coming in fine. So have that conversation with your realtor. Is appraisal going to be an issue? Maybe you were scared to put in offers without inspections and waiving that contingency, but now you might be able to. And you still have this opportunity to lock in these incredibly good interest rates. So don't just pay attention to the high prices. Look at the whole picture. Are you paying too much for rent? Are you? What's your interest rate that you're able to lock in? I had a client who recently got a 2.75, and in fact, somebody told me, unfortunately, it wasn't for my client, but they locked in a 2.3%, which is crazy. Now, I don't know the details of that loan. Maybe it was a 15-year, but that is a crazy good interest rate. So take advantage of these rates. Don't feel fatigued. Hopefully, you're working with a realtor who is analyzing all these things for you and helping you out. And for the buyers who are still waiting, have the conversations with your realtors. Maybe it's time to buy now. Don't wait until next year, because, and it may not be right. If you're waiting for your visas, if there are other reasons that you're waiting, please do. But if you're just intimidated by the market, have those conversations. Maybe this is now the market for you. Hope this was helpful. Please subscribe to my channel. There's all kinds of real estate information that you can learn from. If you have any questions, I'm always happy to answer. If there are any topics you'd like to see in my future videos, let me know. Have a wonderful day, and I'll see you soon.